Hi business students, this is the last section of your business plan and it is the finance section. This is the most important section of the business plan because this is the make or break. This is the vital information you need to know whether your business is going to be profitable or not. You start with source of finance. So source of finance is how you've got the money together to start this business. You might have decided as a business that you are each going to put in $20, $30, $40 each, etc. Or you may have done some sort of fundraising, or you may have been given a donation from your parents or something like that. So that is the source of where you're going to start getting your money from to buy your raw materials to start your business up. It should be enough to cover your raw materials. You must justify it is enough, so you will say together we needed $150 to buy the materials, so we decided as directors would each put in this amount and it equals $150, and that is all we need. Then you want to talk about financial control methods. That's the section here, financial control methods. How you keep your money safe, keeping receipts, checking that you've made payments on time, checking your bank statements, having a bank account, having two signatories or only two people, the finance director and the managing director, who are able to withdraw funds or transfer money. You have some sort of safety net so that you're not going to just lose money, there's not going to be stolen. How are you going to keep your money safe? So the finance director is really responsible for holding on to receipts, keeping them safe so that you can go back and check those, keeping a track of all the expenses coming out of the business and all the income coming into the business. You need to say why this is important. Obviously, if you're not keeping track of your finances, money can get lost. You don't know whether you are in debt or in profit because you're not keeping track of these receipts or these figures. So it's a very important section. So you just need to justify why it's important to have financial control methods and what those methods are. Now the biggie, the budget. The budget is your plan of all income sources and all expenses sources. For the budget, we put in everything. We put in your young enterprise registration fee as an expense. You put in your shares that you each contributed to the business as the startup capital as income. So this is just your overall everything, and it is the plan. So keep it simple. This is just the draft, so don't go into any fancy month by month yet because we don't know how that's going to pan out. When we come to do your second business plan, you can get a bit more fancy then. If we're going to be doing online sales all year, then you can do a month by month budget. But for now, let's just keep it real simple. We just want income, less expenses. Okay, so just set it out in a nice simple way like that. It can't get much more simple than what I've done there. The example that this is posted on Google Class, do look at it closely. I did handwrite it because it was quicker for me that way. You just want your income less your expenses equals your profit. It's simple as that, okay? If you are not really sure at this point what your income is likely to be and what your expenses are likely to be, at this stage just draw the template up and leave it blank until you've talked to your CEO or your productions director, until you've got some actual figures. You could roughly estimate because a budget is an estimation. So if you were intending on selling like 50 units, if you could find out roughly how much those 50 units would cost to get as raw materials, then you can say that that's your expenses. You can add sort of a figure like $20 for administration, printing, advertising, something like that would be a good idea. And add your registration fees of $35 per director is what you're going to have to pay Young Enterprise to do the enterprise scheme. So those are all expenses. Add them together. And the income, how you calculate that? Well, if you said you're going to sell and make 50 units, then you would have come up against a price that you were comfortable with selling it at. The customer was happy with that. It's going to cover the cost of the materials. So whatever that price is that you've decided to sell it for, you times that by the 50 units, and that tells you what your income is. You also add to that your shares. So if each director is putting in $20, add that, and that's your income. Okay, if you're having trouble with that, leave a comment below. I'm happy to go through it again. Maybe I'll draw a great big picture and go through it step by step with you. Have a go. Break even. You need to know whether your business selling at the price that you're happy with is actually going to break even. This means cover the costs. Your price you're selling your product for has to be more than you're paying the supplier for the materials for. It has to. And you need to make sure that you're going to have enough units to sell that will cover that cost. So we're going to make it real simple. There are very complicated break-evens to do. We're just going to have a total or fixed cost, and we're just going to have our revenue. So if we graphed it, it would be fixed costs of like 140 or whatever it is, and then your revenue coming up the side, and the point where those two lines meet would be the break-even, and you'd take it down to a number of sales, and that's effectively what a break-even is. It tells you how many of the units you need to sell at a certain price in order to cover the expenses. So if you want to work out how to come up with these figures, use your budget figures. If you haven't quite got those yet, again, just have the template out ready. I have suggested on this document here, going from the budget that I've already come up with, how you would work this out. So if you have a really good decent look at that, you'll be able to see how I've come up with those figures. It's very easy. The main thing is you've got to figure out what all your total costs are. Get that from the budget. Once you've figured out what your costs are, you need to divide it by the selling price of your unit. So if you're deciding to sell your products for $5, you do your total cost divided by the $5. I came up with 85. So 85 is the units I need to sell. I need to sell 85 units in order to cover my costs, which is quite a few. All right, so we can convert that into a graph later for the purposes of this draft. It's not that necessary. If you want to have a go at using Excel or numbers, you can have a go at that. But for the purposes of the draft, honestly, just do it in a written form like that. It's probably the easiest. If you already know how to do a break-even from year 10, go for it. But I'm not going to mark you down for that if you don't get it together. I may have to do a more detailed YouTube clip on that as well. Then the last thing the finance director has to do is the income statement projections. So these are based on high, medium and low sales forecasts. The low is going to be your break-even point. So for that example just used, it would be the sale of 85 units would be the break-even. And so your low sales has to be 85 units. You never plan to fail in business. You always plan to at least your low sales will cover your costs. And an income statement is very, very simple. It's just revenue from sales minus the expenses of operating the business. So we don't put the young enterprise fees in this one. We don't put your shares as income. We just have sales revenue, which is the number of sales times the price, and then you minus from that the expenses of your raw materials, and that would give you a high, medium and low. Just keep it very simple like this example. Revenue less expenses equals profit. And because you are possibly just going to buy everything in bulk to start with, and that's the year, just keep the costs the same. So it doesn't matter how many units you sell, you're probably going to get the same, you're going to bulk order and get them all in at the same time. So you can call the cost the same no matter how many units you sell. Because if you're going to order once, those are your costs and you have to cover them. Okay, that is the business plan in a nutshell. Good luck. I'll be watching your business plans. I'll be going online and having a wee look at those in the next days, and I'll be leaving comments on your actual business plans. So if there was something that was unclear and you'd like me to do another one of these videos to help explain, please comment below and I'm happy to do that. Okay, ka kite.